So we are live. So good morning, good afternoon, everyone. I hope you're all doing good. So welcome to the NextGen Banca Webinar, jointly hosted by Instaful and Shoreline Asia and our logistic partners, CxO Global Forum. By way of some background, so we had last month we had started off a NextGen Banca survey where all insurance companies in Pakistan who were active in bank insurance distribution were invited to participate and respond to some very relevant but anonymous questions, which means that you are not asked to supply any specific information that recognizes you as an insurance company. Glad that we received overwhelmingly great response from you, which was like more than 90%, which is quite incredible. So we really thank you for taking your time and participating in the survey. That also reflects your seriousness about modernizing the local bank insurance industry in line with the international best practices. So we had promised, if you recall, when we invited you for the survey, we had promised that we will compile the results and we will present over a webinar. So this is that event taking place right now. So just some housekeeping stuff. So we will do a quick round of introductions. We have some colleagues from Shoreline, and then we have our opening remarks from Nilofer. We'll do a quick round of introduction. Then we will let Nilofer share some of her thoughts, formally kick off the webinar, and then we will hand it over to Doug for walking us through the research and the key recommendations from the survey. So yeah, so with this, we formally kick off the webinar, and I would request first Nilofer and then others in alphabetical order to please briefly introduce yourself, and then we let Nilofer take over for her opening speech. Thank you very much. Nilofer.
Thank you very much, Rehan, for the introduction. So I'm Nilofer Sohail. I work at EFU Life. I'm the general manager and I look after the channel strategy and growth segments at EFU Life. So it's a pleasure to be here with my colleagues from Shoreline Asia and Instaful. And it is so good that we are talking about this needed subject right now. So I don't have a written write-up that I would be speaking about, but it is more from the experience that I have had from years. So the webinar is about NextGen Bank Assurance. My association from bank assurance is from two fronts. So firstly, I was at the distribution side of it. So while I worked at a Standard Chartered Bank and I was involved in the bank assurance distribution. And now I am on the making side of it. So I am part of EFU Life. Product development comes under my arena. So work very closely with actuaries, with other people involved in the product development area to come up with the product for bank assurance. But really, when you talk about bank assurance and you see the real thing right now, so we started, I think the first bank assurance contract that was executed in Pakistan was in 2004. So around 20 or more years since we have started bank assurance in Pakistan. And if you would ask me that what has given growth to life insurance industry for many years, I would say it is bank assurance. For many years it did that. Why? Two or three things that played a role. So banks thought that they had something else beyond banking services to offer to the clients. So they were seen as a one-stop solution for their banking needs. Insurers thought it was a great concept because distribution is challenging. It has always been challenging. It is challenging, but insurers thought that now they can find a central contact point where they have customers, lots and lots of customers to whom they can offer insurance. And that's how I think it picked, and it picked really well. Life insurers in Pakistan have shown growth in bank assurance. But what's happening now, and I talk about say last 3 years, so what we are seeing, bank assurance industry is I can say concentrated. So there is no rapid growth as such. It's like a constant, a stagnant line. Not the official numbers, but unofficially from market intel, around 14 billion is where we have been from, say, 2021, 2022, and the latest numbers, 2023. So, can we say that it's not working? I would not certainly say that. And obviously, when we have the survey results, I am very much looking forward to it, as the rest of you who are attending this seminar. And because it is very interesting to know the insights coming from the people who are really involved in it. So, I would say that till now we have used the potential of the branches that are offering bank assurance products, and mainly to the deposit customers. Have other segments participated in bank assurance? I would again not say no, they haven't. They have participated. So you have insurance being clubbed into many banking products. They can be your lending products, they can be your credit card segment, they can be other digital segments. Some are also offering it through their call centers. So yes, other segments have been utilized, but is that is that what it is? No, there is a lot of opportunity of growth. I think there is a lot of opportunity where we can go beyond the traditional means and traditional ways of offering insurance and reaching to the customers. So yes, when you say digital, yeah, it is the new norm. But what we also have to understand, in Pakistan, the dynamics of insurance. So we are in the country where less than 1% is the insurance penetration. The awareness is very low. So how can we use these different mechanics to offer bank assurance? So I think the first thing that instantly comes into my mind, that how we can leverage these great platforms, is we can generate a lot of awareness, and that can be through digital means. Because we also, on the other hand, know that every Pakistani, almost every Pakistani who we want to be, who want we want our as our customers, are using smartphones. So yes, we can go through them, we can penetrate, we can create a lot of awareness. Are we completely ready for digital? I think our survey will give us some more insights to it. But I would say that for some time, digital is how we can go about it. So yes, we can create a lot of awareness. We can make our processes use digital means and reach to the customers. And that's how I think we can create a lot of new potential in banks. Beyond deposits, there are lots of customers who are reaching these platforms for their different needs. So there are loan customers, there are, as I said, credit card customers. There now they are now the banks are opening account in newer categories that didn't existed before. For example, the freelance category, a complete new category of bank is out there, digital banks. So yes, when they are trying and experimenting new things, we can partner with them, and we can grow as they grow. I think this is one thing that for me has been the recipe to success. Enter, learn, work, collaborate, partner, and grow as they grow. Learn as they do. Last thing before I close my opening speeches, one thing that we should always, and we have somehow missed in the entire conversation, is the impact of claims. The claims that we are paying in bank assurance itself, if I'm not talking about one company in general, but billions of claims are being paid out every year. But do we speak enough about it? I think no, there is still room that we can actually tell the consumer what impact are we creating in their lives. And that's how the banks will also get more attached, because eventually it's their customers who are benefiting from these claims. So these were a few points from my side. Thank you so much once again. Looking forward to the session, looking forward to the survey, and looking forward to the great things that lie ahead. Thank you.
Thank you very much, Nilofer. Clear and positive as always. Really great remarks. I'll now request the team from Shoreline Asia, our partner, to give their brief introductions, and then Doug to please lead the proceedings. Over to Doug, Gary Graham in that order, and then back to Doug. Thank you.
Yeah, Thank you, Rehan. I appreciate it. And Nilofer, thank you very much for those interesting opening remarks. Just very briefly, I am the chairperson of Shoreline Asia. We are a very collegiate organisation, but my particular focus within the organisation is both strategy, bancassurance strategy, of course, as well as training and our learning management system. Prior to joining Shoreline Asia, I worked with organisations such as AXA, Aviva, AIA, Cigna, around Asia, Australia, and increasingly into the Middle East and Africa, working with those sorts of organisations on matters such as, once again, bancassurance, strategy, product development, distribution, and what have you. So that's a very brief potted introduction to me. So thank you very much, everybody, as well, for joining us tonight. And I'll pass it over to Gary.
Thank you, Doug, and welcome everyone, and thank you for attending the forum. I've worked it out, I think it's just over 30 years now working in bancassurance. I first started Nilofer in 1995, would you believe, selling insurance when I was on the bank side also. Then I moved across and working with AIG, I was able to set up AIG across Asia with their direct response marketing, which included bancassurance. And then I was responsible for Cigna International across Greater Asia. My specialty, I suppose, is all around sales, marketing, online, and direct response type channels, but also the heavy application of data analytics and how that can really improve acquisition cost ratios, but also longevity of policy ownership. So I look forward to the presentation, and I'll pass to Graham.
Thank you, Gary. Okay, so I'm Graham Morris. I'm CEO of Shoreline Asia, currently based in Kuala Lumpur. This is, again, we all have grey hair, right? So this is my 29th year in the region since coming here in early 1995. And I've worked around the region in developing markets mainly during that time. And the vast majority of the work that I've done and the implementations that I've done have been in bancassurance. All the main bancassurances in each market, generally early stages of the market to start with. So I'm very used to that. Just recently in Myanmar, which obviously is not even an emerging market, you might say a nascent market. And I'm focusing on implementation and execution. I guess probably 35 years in total, because I was in bancassurance products in the UK before that. And like I say, I've focused on the operational sales model because I'm from very much a sales background. Just for your information, I actually have been to Pakistan before. I actually first came to Karachi in 2007, and I was working on a conference there, speaking at a conference on bancassurance in the early years. I think we heard just then that it started in 2004 or so, and that was with Siddharth Haider and Morshed. So again, looking forward to this and looking forward to the interaction later as well.
Okay, thank you, Graham. Rehan, what I would like to ask now is if we could just have CxO put up the slides on the screen, please.
Yeah. So while we fix that, so it's interesting to know that background, Graham, that the bancassurance, the way we look at it today in Pakistan, you have a role to play in that.
Correct.
Yes. Absolutely.
All right. I see we have the slides on the screen, so let's continue. I'll pass through the introductory remarks because we've already had them. So I thought we would start with the most complicated slide. So when we sent out the questionnaire, one of the questions that was most important is what are the critical success factors for bancassurance? And the most significant was in column 1, going down to the least significant or the least popular in column 10. So 1 is most popular, 10 is least popular. And whilst it's a very busy chart, nevertheless, what we can see is if we look at most popular, purple is compensation package. And yellow is incentives for bank staff and insurance sales staff to promote insurance. So far and away, we can see that from an insurance company's point of view, the most critical success factors are undoubtedly the compensation that they are able to provide. Now, there's nothing unusual in that. That's pretty standard, particularly across emerging markets. And what's interesting is that as markets mature and they move beyond that stage of emerging markets, that actually changes. And things like governance structure, underwriting and claim service, training, etc., start to move further up the hierarchy. But it's not unusual to see remuneration in its various guises as the most important things in an emerging market. Now, the danger of that, of course, is that the focus when it comes to servicing clients is to maximize the remuneration. And the danger of that, of course, and I'm sure you don't need me to tell you this, but the danger of that, of course, is that that leads to not necessarily desirable behaviors. It skews the behaviors. And it's something to always keep in mind. When you are trying to establish a bancassurance channel, focusing on the remuneration side of it, as I said, it can cause unwanted behaviors, and that then, of course, can cause additional problems. If we look at mid-order factors, training, marketing, product, and number of insurance style staff are mid-order factors. So if we look at, for argument's sake, around about the 5s to 6s, we can see that things like marketing materials, number of insurance sales people in the branches, product portfolio, etc., they're mid-order requirements. And then the bottom order are things like omni-channel sales journey, governance structures, claim service, etc. They're bottom order factors. They're more hygiene factors. And as I said, what's interesting is we do these surveys across a number of markets. And I'll make the point here. We all know the broad strategic themes of bancassurance. The bancassurance is a brand exercise. The bancassurance is a great way of building additional non-interest income for banks, etc. We all know those big themes. But it's often very difficult to become a lot more or get a lot more granular information. And the purposes of these surveys is to provide the industry in whatever particular country we do these in, is to provide them with that more granular information, and hence some of the complexity that you see in this slide. But what it says is that first order is remuneration. Second order is marketing, product, number of insurance sales, and then bottom order is underwriting and claim service. Now, you can form your own view on whether that's an appropriate approach by the industry, but that's what the industry is telling us are the most important middle order, least important ranking. Okay, so if we can go to the next slide. Actually, that's me. Now, I mentioned about emerging markets. Now, what's interesting here is we asked how many years have you been active in bancassurance? And we can see that almost half of the industry has been active in bancassurance for 15 years. And a very small proportion of the industry has been active in bancassurance for under 5 years. So from an experience point of view, then you can see we have 6 and 10, 11 to 15 years. They're not insignificant periods of time. And what's interesting to contemplate is given the amount of time that many of the players have been involved in the bancassurance channel, as we go through these slides, has the bancassurance channel, and I will distinguish that from the overall maturity of the insurance market in Pakistan, has the bancassurance channel actually matured in the manner that you would think it would have? Now, given as we go through the slides, you'll think maybe yes, maybe no, but it's something that's interesting to contemplate. Bancassurance is far from being a new distribution channel in bancassurance. And one of the things that's interesting to contemplate is that there's research that says bancassurance can actually take, or a bancassurance relationship can actually take up to 20 years before it matures and it becomes a successful bancassurance relationship. And part of that is what's the depth and the experience and the maturity of the relationship. And if we harken back to the previous slide where there is so much focus on remuneration, it may be that the bancassurance industry in Pakistan is stuck in that and it takes 20 years to mature cycle. Maybe, maybe not. You could form your own view on that as we go through this. Once again, another very simple slide. So which life insurance products are popular? Please rearrange the products by popularity, most popular in column 1. So once again, you read this as 1 down there and least popular up here. And we can see that unit linked is clearly the preferred life insurance product with whole of life and endowment and health. But far and away, the respondents were telling us that unit-linked products are far and away the most popular products. Now, there's nothing wrong with that, but unit-linked products are arguably the most sophisticated product to provide to a client because the client has to make decisions about risk and reward and time horizon of the investment and what have you. Now, once again, that's fine, but one of the questions is, are the clients actually sophisticated enough to make those decisions? And are they being given sufficient advice so that they can make an informed decision around these matters? And unit-linked products that are poorly explained and consequently result in disappointing outcomes for the customer are one of the largest sources of customer complaint around the world. And the industry in Pakistan, like industries elsewhere as well, particularly in emerging markets, this is not specifically a Pakistan thing, needs to reflect upon the fact is, why are we selling these sophisticated products in such preponderance? And are we exposing ourselves to problems further down the track? The other issue I would point out is that from an insurance company point of view, you want a balanced portfolio, and a heavy reliance on investment products, and in particular unit-linked investment products, will give you an imbalanced portfolio. There's an old saying, one risk dollar, pure risk dollar, one pure risk dollar is worth 10 investment dollars. And it may be that the industry in Pakistan should or could take counsel that you need to put a lot more effort into selling pure risk products. And if the answer is, well, it's too hard to sell pure risk products, then the response might be, so are you taking the easy option? And if you are taking the easy option, then query whether, once again, you're setting yourself up for customer dissatisfaction. Bank assurance is, I'll rephrase this. Bank assurance is all about using the bank's brand to sell. Now, banks create thousands of risks every day. When is the best time to sell a risk product? When the risk is created, and that's what banks do. So we would counsel you to relook at how your touch points are working and how your touch points your people, systems and processes can be reoriented to sell a more balanced approach or a more balanced portfolio of risk and investment products. One of the interesting things as well in this particular slide is that far and away across the world, the most popular product in bancassurance is credit life. And you can see in Pakistan, that's the least popular product. Now, I understand why that is, because of the particular economic circumstances of Pakistan. But nevertheless, that points to a more difficult bancassurance environment for Pakistan and bancassurance and banks, because the most popular product in the world is just simply not working for you. And that's obviously going to make the channel that much harder for you. What non-life insurance products are popular? What we can see here, once again, least popular, most popular product is motor vehicle insurance, the blue one there. And that's no surprise. In many emerging markets, when it comes to general insurance, motor vehicle insurance is the most popular product. We can then see health, and then we can see personal accident. So there's no surprises in that particular one. Where, if we were to show you some of the research from other countries, home and contents would feature heavily amongst the most popular. And the reason for that is because of mortgage loans. Once again, because of the particular circumstances of Pakistan, that's not particularly appropriate. So you are heavily reliant on motor vehicle. The danger with motor vehicles, such as it is that it's an area fraught with problems in terms of fraud at claims time. And it's an area where the general insurance participants in the bancassurance channel, I've got no doubt, have a lot of concerns about, and will be putting a lot of effort on in terms of how do they improve the financial performance of their motor vehicle book. What channels are used to distribute insurance products under your bancassurance partnership?
Sorry, Doug. Sorry for interruption. I have to make a quick announcement for those watching. You can use the live chat section of YouTube for your questions. There are already few questions, and we will definitely break for the questions, and we will pick each and every question. So please feel free to drop your questions over there, and those will be picked up once Doug finishes his session. Thank you very much. Over to you, Doug.
Thanks, Rehan. Yes, I should have mentioned that at the start of my talk, so apologies for that. This is a much easier, I'm pleased to announce, this is a much easier slide to follow. So when we ask the participants what channels are used to distribute insurance, once again, no real surprises. This is typical. So face-to-face direct sales by bank staff, 32%. Face-to-face insurance sales specialists, so a referral model. One of the things that was a little bit surprising, telemarketing was somewhat higher than what we would have normally expected. So telemarketing has more of a presence in Pakistan compared to perhaps similar markets or what we would characterize as emerging markets. Digital, once again, that's kind of where we would think it would be, and all of the channels. All of the channels was probably a little bit smaller than what we would have anticipated. One of the observations to make about bancassurance, success in bancassurance is that it's a multi-channel distribution channel. It's not just the branches. Now, the branches for the foreseeable future will probably begin to dominate. I know we have a lot of hype around digital, but what's interesting is we work across Asia, we work across Australia, we work across the Middle East, we work across Africa. Everybody has got digital as the cornerstone of their strategy, but interestingly enough, nobody is happy. Now, our sense is that digital will slowly emerge as the long grind of demographic change happens. But right now, the branches are where you'll make most of your sales. Now, the thing about the branches, even though the list, as I said, is roughly as we expected, the thing about the branches is that we don't train the branch staff to sell insurance. We train them in a service transaction environment, but we don't train them to how to sell insurance. And this is a major issue. Bancassurance, in some senses, is a perennial disappointment. And the reason why bancassurance is a perennial disappointment is because we focus on product, we focus on how much are we going to get, we focus, is it a cheap deal? We never focus on the culture of the bank. And if you look at the fact that 58% of our sales are being done via the branch, and we are not focusing on how to actually make the branch into an insurance sales centre, then don't be surprised if you're not happy with your insurance sales.
And Doug, if I may, Doug, just to highlight the contradiction or the irony of the banking strategy going forward, is a lot of banks throughout the globe looking to move traffic away from the branches to reduce that cost of distribution. And yet you see that 58% here, for example, it's where the sales are happening. So there's a contradiction happening in that strategic shift by the banks to move to more digital and online presence.
Yeah, thank you, Gary. And we've been speaking to a lot of Asian banks, and there's no doubt that footfall in the branches is falling, and they're relying on digital to pick it up, and it's not. So footfall might be falling by 30%. Digital is picking it up by 10%. So it's not replacing it. It's quite an issue. Once again, we'll go back to a slightly more complicated. So what is the most important resource for referrals, customer leads from the bank to convert insurance sales? Please rank in the order of importance. And once again, 1 is most important, 7 is least important. Now, what's interesting here is the surprising number of respondents who said the branch manager is the most important. That's completely, that is unexpected, quite frankly, having that high response saying that the branch manager is the most important. Now, it may be, quite frankly, that the respondents slightly misunderstood the question, because there is no doubt that without the support of the branch manager, then bancassurance in the branch will struggle. So maybe that was the way they were responding to it. But the thing about relying on the branch manager is there's only one of them, and they only have so many relationships. So I would imagine that's quite quickly exhausted. We then see the bank's customer database, and that's good to see. And that is, in a sense, as you would expect, because you would imagine that the branches and the marketing people and the call center people, etc., are mining the customer database in order to generate those leads. And so you can see database, and then given what I've just said, no surprising that the call center and the telemarketing then move in. But what's really interesting is that the branch staff don't appear up there. We only get the branch staff. And, you know, if we weight the top 3, we can see that the branch staff is significant. But nevertheless, it's surprising that they are not the first order. And as I said, it may just be the way people interpreted the question. And you could coherently argue that there's a heavy weighting of branch staff when we look at the top 3 in total. But your branch staff are key. If your branches are still so important in your bancassurance channel, then having your branch staff ready, willing, and able to either make the sale or make the referral is in fact your core strategy. I was speaking to a bank in Africa today, and we were talking about their go-to-market strategy. And my comment was, your go-to-market strategy is easy. You're going to sell insurance through the bank branches. Any questions? What you then need to figure out is how to have those branches actually capable of selling insurance. And I've said this a couple of times, and I'll say it again. Having your branches and your branch staff in the position where they are prepared and willing to make a referral or make a sale is the number 1 issue for success in bancassurance. And until such time as digital takes over, that's not going to change. What segments are targeted to distribute insurance products under your bancassurance partnership? Choose all relevant. Borrowers, including credit card holders, deposit account holders, corporate and SME, high net worth, and all of the above. I understand the issue with loans in Pakistan, but nevertheless, that split is probably as we would have expected. maybe we would have thought that all of the above would have been a slightly bigger number, given the fact that all of these are segments within most banks, in fact, all banks' databases. So maybe that's a bit of a surprise that everybody's not using all of the available market segments for them. But apart from that observation, I think that's pretty much as you would expect. And all I would encourage you to do is to recognise that bancassurance is an omni-channel strategy, and all of these segments have got opportunity. One other observation is that the corporate and SME segment is often one that organisations are really keen to access, but don't do very well. So it often remains a gleam in everybody's eye. You need to really think through, if you want to access SME from a bancassurance perspective, what does SME? I mean, SME is huge, a hugely broad target market. Where are you going to focus, and how are you going to build your proposition for those areas where you're going to focus? What is the most common cause of customer complaints or cancellations of products in your bancassurance business? Mis-selling. Now, here's the thing. Bancassurance, effectively, the reason why bancassurance works is because the insurance company is borrowing the bank's brand. That's why we have bancassurance. And if the insurance company didn't need to borrow the bank's brand, we simply would not have bancassurance. And the reason why the insurance company needs to borrow the bank's brand is because the brand of a bank is much stronger than the brand of an insurance company, hence bancassurance. Now, arguably, the biggest asset of a bank is its brand. And if you look at listed banks, 14 to 50% of their brand is in fact, their market value is in fact their brand. So this is a big deal for banks. And if you're having such a high level of complaint around mis-selling, what it then translates to is a direct line into trashing the bank's brand. And no brand is going to thank you for that. And no bank is going to thank you for that. So mis-selling is a major source of issues on bancassurance all over the world. And we've just seen a massive mis-selling scandal in Vietnam, which is causing huge problems for the bancassurance industry there. And where I'm from and where Gary is from, Australia, the mis-selling scandals reached such a point that there was a major government inquiry, and the upshot of that is that all the banks have effectively pulled out of bancassurance. So pushing the branch staff to sell at the expense of ethical and compliant selling, whilst it may help to achieve this year's targets, it is guaranteed that it's going to create more problems than it's worth further down the track. So if you've got a problem with mis-selling in your bancassurance channels, then all I can say is we would urge you to address that as a matter of absolute priority, because it will be exceptionally unhelpful further down the track. And one of the points that I like to make, or we like to make, is that remember this: when these mis-selling scandals erupt, they won't be judged according to the rules of today. They'll be judged according to the rules of 5, 6, 7, 10 years down the track when they emerge. And as we all know, the compliance rules 5, 6, 7, 10 years down the track are going to be significantly more onerous than they are today. So it's something to really pay heed to. The other point that we've made here is that you need to think carefully about your recognition and reward structures. If your recognition and reward structures simply encourage selling, then you are arguably encouraging the wrong behaviours. Your recognition reward structure should be much more well-rounded to encourage certainly performance. I mean, you need to make money, but also compliance and also culture. And we often talk about recognition and reward as a three-legged stool: performance, compliance, culture. And once again, we will simply urge you to take those sort of matters into consideration. Moving on. So what top channels provide you with the majority of your premium income? Please rank in the order of importance. Largely as expected. There's the branch. there's face-to-face. So effectively, that's the branch staff selling. That's the branch staff making referrals. And given the size of the telemarketing segment that we saw on the previous slide, it's no surprise that we see telemarketing there as well. We see digital here as very much a middle order exercise. And other is obviously a very broad church, and we would have to dive into that a little bit more. But once again, given experience in other markets, given the pie charts that we saw previously, there's no surprises in that particular breakdown. Incentives. We mentioned that the incentives that you provide are really crucial. And one of the things about insurance is that there's an old saying in insurance, and that is that compensation drives behavior. So your compensation package is extremely important. So what type of incentives are provided to drive sales? Now, this is multiple. So different organizations would have put in different ranges. But we can see here is insurance is a discrete, specific part of the bank's senior and regional managers' KPIs. Insurance is a discrete, specific part of the branch manager or staff KPIs. Monetary rewards to branch staff for generating leads, making sales. Non-monetary rewards to branch staff for generating leads, making sales, gift vouchers and what have you. Group awards to the bank branch for sales leads to be used for the benefit of the branch in its entirety. Competitions within regions or nationally where there are trophies for sales performance, and campaigns where staff may qualify for trips, either within Pakistan or overseas. Now, this is a typical suite of compensation opportunities, and nothing in there, once again, is in terms of its weighting, is a particular surprise. For argument's sake, campaigns where staff may qualify for trips are very common and very popular across many Asian and Southeast Asian markets. Non-monetary rewards, and often non-monetary rewards driven by the fact that the regulator is very strict on the sort of rewards that the bancassurance channel is able to provide to staff. The comment we would make upon remuneration is that one way or the other, the staff need to see that they are being remunerated for their effort in bancassurance. And I mentioned before that compensation drives behaviour. And we were working with a bank in Zambia where the bancassurance channel was failing because the bank refused to give the staff any recognition or reward. We convinced them to try, and the moment or the time that they introduced that recognition and reward, the response was dramatic to the positive. And what that shows is that recognition and reward, along with teaching your staff how to actually have an insurance conversation, are pillars of bancassurance success. And we would encourage you to think through the sophistication of your recognition and reward, because it is so important. And recognition and reward shouldn't just be on sales. One of the lifebloods of bancassurance, particularly where you have bancassurance sellers or bancassurance specialists, is referrals. Referrals are a lifeblood of bancassurance, and your recognition and reward should reward the staff for making referrals. Without your bank manager's support, bancassurance will struggle. So your recognition and reward absolutely should treat your branch managers as key accounts. The branch staff in their entirety create the environment for bancassurance success. And therefore your recognition and reward, we would suggest, should also include recognition for the branch overall for creating an environment for bancassurance success. So they're just some of our ideas and some of our pointers in this particular area. Do you have a head of bancassurance for managing the business? No, 29. Yes, 71. Now, I would imagine, at least in part, that's related to the scale of the bancassurance business. If bancassurance is a modest part of your business, then it may not be economical, or you may simply not have the focus, and hence the 29. And then the 71% recognise that this is important. We would suggest that bancassurance is important because of its potential. And of course, somebody needs to be accountable to drive things forward. So if you don't have a head of bancassurance, and bancassurance is a strategic priority, then we would suggest that you should seriously consider having that head of bancassurance and a senior member of the staff in order to get the focus and the commitment and get the voice, quite frankly, get the voice of bancassurance in the decision-making councils of the organisation. But as I said, we recognise that it depends on the scale of bancassurance for you and the strategic importance that you place on bancassurance. How big is the central dedicated bancassurance team? And in a sense, I'll mirror my remarks on the previous slide, and that is, if bancassurance is a significant part of your business, then you'll have a large bancassurance team. If bancassurance is not a significant part of your business, then of course it'll scale down accordingly. We make the point that under-resourced or a lack of skilled specialists with dedicated responsibilities will hamper your bancassurance performance. But of course, once again, we temper that with, number one, how much does it bring into your organisation? Number two, what does it mean to your strategy? So we put that information there just as a piece of granular information so you can see how it's playing out in your industry. Of course, it's then up to you to make your interpretation about what that means for the industry and what that means for you. How often do you meet your bancassurance partner at CEO or board level? Once a quarter, once a year, once a month, no set time. We were very surprised at this. Very surprised. Once again, I temper it with the fact that bancassurance might be a small part of many organisations' business. It might not be strategic, so that might be an influence. But given the potential of bancassurance, query whether that's the right approach. One of the things that we've noticed about bancassurance across all markets is we can sum it up as this: cooperation equals return on investment. Now, if you're not meeting regularly with the senior decision maker or the senior member of your partner, then that's going to percolate down probably through the entire organisation. And what that then means is that your bancassurance partner is not going to see this as a strategic priority. Once a quarter, our view is once a quarter is your minimum. And you can see 50% of the industry is doing once a quarter. Only 7% has really embraced that concept of cooperation equals ROI. We need to get very close to our bancassurance partner because that's how we're going to make money. And to the participants in tonight's presentation, and to those who we will have subsequent conversations with around this, we would urge you to try for, at a minimum, once a quarter, but really push for once a month. Because that's where you're going to get that cooperation, that's where you're going to get that affiliation, that's when you going to start getting that from the top, driving that cultural change. So we were kind of surprised at those two numbers. What areas of training have you provided to bank partners? Please select all relevant. So 12, bancassurance orientation for strategic knowledge for senior management. Bancassurance orientation for branch staff. Product training, sales training, training related to specific channels such as digital. That's a pretty good spread, actually. Particularly this piece here, strategic knowledge for senior management, and bancassurance orientation for staff. That paints that's actually more than what we would have anticipated, quite frankly, or a higher preponderance of insurance organisations actually doing that. In many other markets, the majority of the training that goes on is product training for the staff. So that's actually indicate some strategic thought about how we need to get our partners aligned. But what we would stress, not because this is showing that there are problems, but it's just worthwhile contemplating, is that when it comes to success in bancassurance, and in particular we're thinking about sales here, sales is a three-legged stool. Take away one of the stools and the stool falls over. And success in sales requires experience, and that's what training does. Some people often wonder why we do so much training, and the reason why we do so much training is because training is a shortcut to experience. That's why we do training. So success in bancassurance sales is a three-legged stool: experience, training. The other are motivation, and of course, how do we motivate people? By recognition and reward, and that's the point we made before. If your recognition and reward is inappropriate or insufficient or mistargeted, or even perhaps even just not very well communicated, then that leg of the stool won't be there and it will fall over. The third leg of the stool is distribution channels that are delivering. Now that speaks to a number of things, but in particular, it speaks to referrals. And if you don't have an adequate referral system in your branches and you are not giving adequate recognition and reward to your staff for making referrals, then that leg of the stool will fall over. So you need training, you need recognition and reward, and you need a really solid referral process. And focus. If you do those three things well, we're pretty confident that you will see an improvement in the performance of your bancassurance channel. Who primarily sells insurance? Branch staff here, dedicated insurance sales, Team Hyde from the bank. And once again, that's pretty much how we would have expected it. There's no surprise in that. But once again, here and here, particularly here, you're super reliant on those people being able to talk to customers about insurance in the correct way. And you're super reliant here on these people making referrals to those people. And once again, it's worth contemplating how you're managing those people being able to talk to customers about insurance and how you're making those people, having those people as a distribution channel referrals that are performing. Do you think that your income from bancassurance will increase or decrease in the next 12 months? Choose one. Increase by 10%, increase by 21%, increase by over 30%, decrease by 10%. It is a concern that over 1/3 of respondents believe their bancassurance will decline. But it's also optimistic that such a significant percentage of the industry are quite bullish on the performance of their bancassurance channel.
In fact, Doug, if I may, it'd be a next deep dive on that would be interesting to establish how long have the players that look at being a decrease, have they been in there for 15 plus years? And the converse, those looking at increase, that would be interesting to see if there's some frustration. We've been trying this and it's not getting where we wanted to get it to, or if those that are believing it's going to increase by 20 to 30%, that they are making refinements and getting some positive response.
Yeah, great, interesting point, Gary. And in fact, given that we've got the data, we could probably do that analysis, and it would be interesting to do. Are you happy with the service and support you are receiving from your banking partner? Rate how happy you are. Happy 54, unhappy, very unhappy. Most of the time, the insurance companies are, shall I say, ambivalent about the engagement around these matters from their banking partner. So in a sense, this isn't a surprise, but it doesn't change the fact that what we've said before, cooperation equals return on investments. And 46% of the respondents from our Pakistan survey are indicating that return on investment from marketing spend is unsatisfactory. Now, for large organisations to be engaging with other large organisations, and then for 46% to say, you know what, we're not happy with how our marketing support and the tools we're doing and how the budget is being spent, we're not happy with how that's working, is a high number. Now, as I said, it's not necessarily a number that is shocking compared to the experience in other markets, but in and of itself, it's a high number. And the issue that needs to be considered is, or at least one issue, I beg your pardon, because there's always many. One issue is your marketing spend misdirected? And this goes back to what I said earlier on, and I said it deliberately because I knew we'd get to this point, and that's speaking to the African bank today. And that is, your go-to-market proposition is really easy. Leverage off the bank's brand. I mean, that's it. So the question then becomes is, where are you spending your marketing dollar? And if you're not spending your marketing dollar and that includes recognition and reward, if you're not spending the marketing dollar getting the branch staff in tune with the program, then you're probably spending misdirected money. And our experience is a lot of money is wasted on marketing because it's spent in conventional marketing ways rather than bancassurance marketing ways. So what we would suggest is just take a step back with your marketing spend and saying, are we spending this as though it's a conventional insurance distribution channel, or are we spending this as though it's a bancassurance channel? Because they're two different things. So, service and support. Once again, we can see, not surprisingly, and I would imagine if we went back and did the correlation, the same people who answered unhappy and very unhappy in the previous slide are probably the same people here. For 46% of insurance companies to be unhappy with their banking partner, once again, it doesn't necessarily make it an outlier compared to experience in other markets, but it's still not adequate. It's still not acceptable. And if we then sheet that against, or bring that back against the fact that this is not a new channel in Pakistan. Yeah, this has been many of the players in Pakistan have been going for many years. And the fact that a significant percentage of the players are unhappy with the range of products, it speaks to poor engagement between the bank and the insurance company. And one of the issues with bancassurance is the insurer, particularly if they're not part of the same conglomerate, the insurer is typically the junior partner. So they pretty much have to take whatever the bank's prepared to provide them. So you've got to be smart, and you've got to be savvy, and you've got to be strategic about how you engage with your banks. At the end of the day, bancassurance is all about selling more product. And if 46% of the industry is unhappy with the amount of product then you're being sold, then you're never going to be happy. So a key challenge is, how do we get more of our products being sold by the bank? Easily said. How do we do it? Well, that's a piece of work. But one of the things that we suggest to our clients, or the people we work with, is you need to look at all of the touch points where a bank touches a customer, and then how can an insurance product and or an insurance proposition be woven into that touch point? That's strategic. Simply knocking on the door and saying, can you please sell our new variable universal life and we'll give you more commission than the other guy, that's not strategic. That's just tactical, and it's clumsy, quite frankly. So you need to be strategic about how you discuss where are your customers' product needs, what do your SME needs, what do your high net worth individuals need, how are your premier bankers for your high net worth segment, how are they going about having conversations, and how is that translating into sales? So you need to be strategic rather than just being unhappy. Are you happy with the service and support you are receiving from your banking partner? Rate how happy you are. Now, what's interesting here, and it's somewhat at odds to the previous couple of slides, or the previous two slides. So this is typically a major pain point for insurers. Interesting that a clear majority of respondents here are happy with access. Now, you look at this and you look at the previous two slides and you think, cognitive dissonance. Do I see a contradiction here? And we thought long and hard about this. And if we reflect upon one of the previous slides where we showed that there was actually a really good range of training and good access to training across a range of different groups, if you like, within the bank. And I think this reflects this. I think this is an outworking of that previous slide where the training piece actually seems to be pretty good and pretty well embedded. So whilst we can look at some of those two previous slides and think, work needs to be done, what we can also look at this and say, it looks like the training piece is actually working quite well for the insurance and the bank assurance industry in Pakistan. Reporting. Once again, this is about what we would expect, and I'll just simply make the other points. I'll just repeat what I've said before. For a channel that's been in existence for so long, that's too big. And the parties should have had sufficient time to get alignment on the reporting that they need in order to form a view on whether things are working or not. Now, there's an old saying, which we all know, and that is that if you can't measure it, you can't manage it. And that's what reporting's all about. But there's also a deeper truth. And that deeper truth is that what gets measured shows everybody what's important. And if you're not measuring the right things, or you're not reporting on the right things, effectively what you're telling to people is those other things are not important. And that can then drive relationship and engagement issues as well. So we just urge you, make sure you're getting the reporting and providing the reporting that actually drives the bank assurance forward.
Doug, if I may, Shoreline's relationship management platform outlines 3 specific areas and this was designed around exactly this issue, where you've got partners working together for mutual success, but you end up with percentages that aren't happy. The relationship management platform talks about how do we communicate between each other? What do we interact on? What specifically are we interacting on? And where do we integrate? And you start to answer those questions, and then you lay over 2 other layers. When do we do all of that? And what frequency and recency? And then at what levels of management all the way through to the staff down into the branches. And once you've got that in place, it's been my experience that you will end up with a far more robust, successful relationship across all metrics.
Yeah, thanks, Gary. It's a good point. Okay, look, what I'll do now is I'll just speed this up a little bit because we want to get to questions. This shows a happy to access the bank's customer database. This is not unusual, but it continues to point to a fundamental problem. The bank's customer database is crucial to bank assurance success, along with those other points that I've made. And the fact that you cannot get access to the data, often because of misguided concerns about privacy, data security, etc., and they are misguided as a rule, is a major drawback and a major driver of underperformance. You need to have sophisticated, mature conversations about data and about access to the customer database. And it is such a major pain point. And here it is again. Now, we could talk about this all night, but as I said, I will now speed up. Are you happy with the branch staff engagement? That's actually very good. So despite some of our comments about, you need to get people engaged, etc., that is unusually high with the bank staff engagement. And once again, I think that probably speaks to the training piece as well. That's about as you would expect. And it speaks also to the frequency that you're meeting with your senior counterparts in other parts. But that's about as we would expect. Once again, typically the insurer wants a whole lot more focus on bank assurance, and is very frustrated. That also speaks to the model, and where you have a model that is a distribution partnership where the bank has many insurance company partnerships, then typically the bank has the upper hand or the control, and the insurer is just simply waiting for whatever the bank lets them have or whatever the bank lets them do. So if it's mainly distribution partnerships in Pakistan, it's not surprising that such a high percentage of the insurers are unhappy with the bank's strategic place with regards to bank assurance. Digital initiatives, once again, that's a major pain point. So that's not surprising. It's a matter of ongoing engagement, but it's also a matter of recognizing that digital is an evolutionary process, not a revolutionary process, despite the hype. As I said, distribution agreements where the bank has any number of insurance partnerships, that is the weakest form of bank assurance. And that then speaks to the unhappiness, etc., because the bank has got no commitment. The bank's got no skin in the game. They simply are taking the commission from however many insurance companies they've got agreements with. So it's no surprise that people are unhappy with bank engagement, given the preponderance of distribution agreements. What digital strategies? A consistent real-time user experience, the use of data analytics, the application of AI and robotics, and all of the above. Honestly, my sense is that the responses here are aspirational rather than actual. And the reason why our sense is that the responses are aspirational rather than actual is all of the above, 64%. That is a massive undertaking. Yeah, that is a massive undertaking. So while people might be thinking about it, etc., I suspect that they're in various stages of development. So just some closing observations. The survey points to a bank assurance market that is still quite immature, and naturally. There is a danger that previous mistakes, particularly with regard to mis-selling and lack of staff engagement on how to actually sell insurance, might be repeated. So things like inappropriate sales culture, poor lead generation, short-term income, customer segments ignored or unserved, mis-selling scandals, of course, frustration with engagement, and lack of co-investment into digital capabilities. They're the sort of pictures we get. It's not a picture of, it's not a poor picture, it's a typical picture. And one of the benefits of these sorts of surveys and these sorts of discussions is it actually gives you the chance to say, you know what, we're going to avoid the mistakes that others have made. And we're going to move forward and build a better bank assurance business by avoiding those mistakes. So, ladies and gentlemen, thank you very much for listening to what we have to say. And we'll now throw it open to questions.
Yeah, thank you. The amazing results. I mean, some of them have been very, very interesting and very well presented. Thank you very much. So let's involve some of our colleagues in this discussion. So we have a few questions. So let's quickly rush those through because it's almost lunchtime in Pakistan, and we'll let people go and enjoy their lunch and whatever they do. So so the first question is from our friend Akif. So he says that okay, so the question is there. So yeah, see.
Okay. Look, in one sense, it's impossible to define, but in another sense, you can define it. There's been research by both the World Bank and Swiss Re. And the research from the World Bank and Swiss Re said that until your GDP per head reaches or exceeds US 10,000 per head, then your insurance, both GI and life insurance, your insurance penetration is going to bubble along, flatlining at around about 2-ish to 4-ish%. And that is just destiny. So in one sense, what we can say is an emerging market is any market that hasn't reached that threshold.
Awesome. Let's have the next question. That's again from Akif. So here you go, Doug.
Across Asia, bancassurance accounts for the largest slice. And Graham, I think, and Gary, I think you might have an opinion on that as well. But 30-ish odd percent, so 30-ish odd percent of that 2-ish odd percent.
Yeah, so certainly across Asia, it's maybe 10 to 30% for emerging, and developed, as Doug already referenced, is in the single digits.
Yeah, I'd reinforce that and say, generally, as we know, before bancassurance starts, agency is the major channel. But bancassurance tends to catch up within, 5 to 7 years or so. So again, it depends what we say of the overall sales. But up to 30, 35, even coming up to 50 as well.
Excellent. Thank you. Let's have the next question, please.
Look, as we've mentioned, everybody's got a gleam in their eye around digital, and everybody has got a super gleam in their eye around AI. I think AI is an absolute wild card, but more broadly, as I said before, nobody is particularly happy with their digital right now. And it'll be as the older generations fade away and the newer digital savvy generations grow up and become more important, it'll be that slow transition of the generations. So I see a trend where slowly but surely the bank branches are going to become way less important as sources of transactions, because people are more than happy to do bank transactions on mobile and what have you. But what everybody is talking about is, what is the future of the branch? And the future of the branch is not transactions. The future of the branch is quality conversations. Now, what is bancassurance? Bancassurance is a quality conversation. So you can look at bancassurance as your canary in the coal mine. If you can get your bancassurance channel working successfully, then what that then says is that you can actually chart out a future for your branches. If you cannot get your bancassurance channel successful, then it means you cannot introduce quality conversation into your branches, in which case the future of your branches is really problematic. So just to summarize, future of the bancassurance is central to the future of branches.
Cool. Thank you very much. Doug, I also have a question. So we saw some of the results where we have observed that, either the meetings at the banks, the senior management are not happening as per an ideal frequency, or, the relationship is very, the weakest form, as you mentioned, the distribution agreements and all. And on the other hand, we see that, there has to be and you very rightly pointed out about the culture, insurance companies kind of, understanding and embedding into bank's culture. And as they say that, it takes two to tango. If the bank is having, so it's kind of a paradoxical situation that at one hand, bank is like, keeping the insurer at arm's length. And on the other hand, the success lies in, the two hugging each other together. So how do we kind of get out of this conundrum, in your opinion, please?
Look, Graham has been very good at doing this. I might defer to Graham on that question, if that's okay.
Sorry, I was distracted there. So, Rehan, can you just repeat that?
So the question is that the success of bank insurance lies in the fact that insurance company and bank are, kind of cooperating a lot, right? And insurance companies are understanding and embedding themselves in the bank's culture. On the other extreme, we see that banks are having, like a distribution sort of an arrangement, and then the senior management are not seeing the insurance company frequently. So
Yep.
how do we kind of overcome this to get into a perfect strategic position with the bank?
Okay, long and complex a question and a potential set of areas. Actually, this was going to be something that I was going to cover a little bit in my summary here. The thing is, I mean, that usually happens because at the early stages, insurance is a very small part of the banking, banking sort of income, right? Banks have at all levels, at senior level and even at branch level, they have a lot of other targets and so on and so forth. It's almost like a distraction. That's like a flea, buzzing around your head, etc., etc. So it's always a challenge for the insurance companies to try and get, shelf space for products, senior management time and space, and so on and so forth. As I say, this was something I was going to bring up in my summary, but basically what I found is that the problem is that often insurance companies, we have our own targets, we have our own sort of missions of what our business is, the GWP, the APE, the FYP, our business plan maybe that we have. So if there isn't a joint agreement, if there isn't a joint business going forward, if it isn't governed properly, but also if the insurance company is just there pushing all the time, we don't actually try and understand the bank business enough. We don't try and add value. We try and just focus on insurance products as well. And I think when we start to add value, when we start to look at and understand the bank product issues, when we see that actually it's not just about insurance sales, we have practices, we have sales management, we have stuff in the branches that can actually help them ensure sell bank products as well. The more they see us as a valued, partner, adding more than just commission incomes, that obviously increases as it goes along. So therefore, it becomes more of a something which is in their minds. But that's what we often forget at the beginning. We're pushing all the time. We want the customer base, we want the business, and so on and so forth. We're just a flea. We're a pain in the neck, in effect. So I think that's where the insurance companies need to take a big back and look at what is our why can't we just understand them? They're a customer. Let's look at them as a customer. Let's try and understand their issues, their problems and needs. Can we add more value than that as well? We'll get more shelf space. We'll get more respect.
Awesome. I see we have another question. So can we just put that up, please? So while we figure that out, so let me read the question for you, Doug. So the question is from Anthony Nkungu, our friend from Kenya. This question is that, what do you think will be the impact of bancassurance sales with the current merger and acquisition within both the banks and insurance, especially in emerging markets? Banks are also getting insurance licensees.
Okay, so very quickly, there are 4 models of bancassurance. Number one, as I mentioned, is the distribution agreement, which is where the bank just has any number of partnerships, and that's the least efficient. The second one is where the bank and the insurance company form a strategic alliance. So they might form a strategic alliance to, say, sell a unit-linked product or something like that. The third one is where they do a joint venture and they throw resources and money in, and that's where all the insurance sales are going to be made, and that's where the insurance products are going to be manufactured and whatever. And then the final one is where the insurance company is owned by the bank. Now you can see they are a hierarchy of increasing reasons to cooperate. And the one that is the model that is typically most efficient is where the bank owns the insurance company, because cooperation equals ROI. So where banks are starting their own insurance companies, they are a tremendous threat to the incumbents who are just operating off distribution agreements. So I would urge you to start pushing very hard, in moderation, given Graham's comments, about moving along that curve and trying to get to strategic alliances and joint ventures. Now, joint ventures can be a serious nuisance because the parties squabble, but I would push you to, as far as possible, to start moving down that path. The other thing by being in distribution-only agreements is that as emerging markets start to become more attractive emerging markets, foreign insurers with very large checkbooks come in and start paying big money for bank assurance relationships, freezing out the locals. And that's something you really need to be alert to.
Awesome. Great. Excellent. So that's been wonderful questions. Thank you very much for those who asked. So I think we now will head towards the closing of this this session, this webinar. I will request and kindly invite Graham Morris from Shoreline, CEO Shoreline Asia, to please share some thoughts on closing of the webinar. Over to you, Graham.
Okay, thanks. Seeing the timing, etc. So I won't say too much, but basically, I think sort of summarizing what Doug was saying at the end of the presentation and the results of the survey itself. Then, as we saw, there were some things in there that we just need to be careful of. We're talking about previous mistakes or previous issues. So things like the sales culture and practices, they're very different between the bank and the insurance company. Lead management and so on. Doug talked a few times and it came up about mis-selling scandals, focus on product sales rather than client needs-based sales. So there very much is there's a quality element here, especially as so much takes place in the branch and there's so much customer interaction at that level. And sometimes in my experience as well, because possibly of all of the pressures for sales and so on and so forth, the insurance product can be positioned, or shall we say, perceived by the client as a banking product. So they're not even sure what they've bought, and they even think it's a bank product as well. And often, to be honest, deliberately, depending upon, individual salespeople, their targets and so on. Frustration of engagement, as we say, relationship issues are so big. Bank assurance, the biggest critical success factors, in my experience, are all about relationships. The joint governance of the business, steering committees, working committees, and so on and so forth. It's all about relationships, all the way from the top, all the way down to the relationship levels between the insurance company and the bank. Very important. The other thing that I see as some dangers also is that shoehorning some of the insurance practices, often from agency into the bank assurance model, adopting and not adapting. And that goes back to my point about insurance companies trying to understand not just the bank at a strategic level, but also the bank's business, the bank at the local level, etc., including those sales cultures and practices. So one thought I'd like to leave you with, it's not a panacea, it's not a magic pill, it's not something which I think will solve all of the problems above, but I think it helps in many ways. And this was something I learned, I think, pretty much early on, is that, as I say, one of the biggest critical success factors, it's all about relationships. It's a relationship game. It's a marriage in a way, especially as the bank and the insurance company use those models, as Doug was saying, to get closer and closer with terms of strategic alliances and even joint ventures and so on. And also, you've got to remember that the insurance company, the vast majority of the critical success factors lie in the bank, the branch network, customers, brand, and so on, as I think Doug also mentioned before. And what I learned very early on, that to look at how do we get shelf space, how do we get focus from the bank because we're so focused on our own targets at all levels, deadlines, profits, income, APE, FYC, GWP, and that drove our behavior as compensation and targets do. We will push the bank at all levels, and of course they push back. So it's like a lack of equality in the sales process and the sales approach. So basically, I remember in the steering committee that banks said to us once, all you focus on is your targets, your products, your access to our customers, pushing our staff. You don't try and understand us and our problems. We have our own products to sell and our own issues, remember. So what we tried to do was take a step back. And I'm advising you as insurance companies, if you don't do this currently, is to take a step back. Try to look upon this as the bank as your customer, as a customer that you're trying to sell your products to, much as an individual salesperson would. So, we try to understand then the banking business, what banking is, for each of our partners, their own business, the banking business, situation, customers, products, and so on and so forth. And also their issues and problems at all level, from senior management all the way down to operational branch sales. So it's almost like we did a KYC, know your customer, and we started to make sure that we educated and trained our staff, because if all the critical success factors are in the bank, then we should really understand that to try and help the bank, bring them on our side, and also to unlock all of this potential. If we don't understand what's happening in operational sales, we'll never actually unlock that potential and help our partner. We'll also not make it easy. We'll be just seen as pushing all the time. So we did that. We did that in the branches as well. Banks are not good at lead generation. They're reactive, not proactive in sales culture. We try to understand the branch managers. They need new deposits, new customers. Could we help in that way? Sales management is not a strength of banks. They don't have sales management structures. Could we actually adapt ours to try and help them? And which was what we did, etc. Are they struggling with making corporate accounts profitable? In which case, can we add insurance sales to that to help that? So again, not focusing on our own issues, focusing on the customer's issues in effect. So that's what we tried to do. So again, it's not a magic pill, but what we found was more mutual respect, relationships at all levels improve, chances of issues and problems are minimized, goals and objectives more aligned, business flows easily. So that's just something I take away from my experience for you.
Thank you, Graham. That was wonderful. And yes, so I think we are towards the end of our webinar. Before we part ways, so a couple of quick messages. One is that you can still, if you have any question, those who are attending or those who will play back this video on YouTube, please feel free to ask us by way of reaching out to us, Instaful, and then we will get back to you. Second is, if you still wanna have any points in relation to the survey we conducted, or you still want to do participate in the survey, if you haven't done it, then we'll be happy to assist you with that. With these two key messages, I would like to thank you, the team from Shoreline Asia, for your time. I know it's pretty late for Doug and Gary in Melbourne, which is 6 hours plus from Pakistan. And a very big thank you to Nilofer and EFU Life, and to all our friends who are watching this live, and those who will play it back. So thank you very much for your time. Have a good one, and speak soon, maybe on some of the forum. Thank you very much. Take care.
Thank you, everybody.
Thank you.